This is a video of me showing about how to trade dealing range based on alchemist point of view. So for identifying, what we will start from is identifying our dealing range and uh, how to know it is high probable to trade it and get a bias from the dealing range. So when we get into it, for uh, swing trades, you can use a 4-hour time frame dealing ranges like this, or if you understand it closely and understand the reactive liquidities, you can trade it for intraday and use any time frame ranges to trade this. Since I'm a swing trader, I'm going to be using and showing an example of how to trade it, and it gets a bias uh, while trading a 4-hour dealing range. So when we come to this data we see right now is uh, we see the market reaches into an order block and reverse from there and take out the previous strong low. This is a strong low because it clears a buy sell liquidity. uh, it has clear a buy sell liquidity after reaching into some discount area. It clears a liquidity to the upside and cause this high to form. So when they break this low, we are anticipating the market has shifted into a bearish trend. So how to know this low and this low are a dealing range? Since we are looking on a 4-hour time frame, we will go to the daily time frame and I try to identify this high, and this high has come from a higher time frame, which is a daily time frame area of interest. So let's get into that. When we go to the daily time frame, we see the high, we have an imbalance right here and the liquidity around here. So after price reaching into this fair value gap, it has filled it and reversed from the doji classic V, which is a daily classic V, which will make it is high probable and a very strong level. So the high has taken out a liquidity, which in this case we can make it the imbalance level, and reaches into our supply zone, which is a 4-hour order block or a continuation supply zone, and used a classic V, which is on a daily time frame, which is a high probability uh, or a strong support level. So when we go to the low, what we need to see is this needs to be in a area of interest and uh, take out a liquidity. This low is just confirming the macro, which is since the higher time frame has been moving after reaching into a weekly premium area, it has moving. This is a higher high, so the price goes lower low, lower high, lower low, lower high, lower low, lower high, lower low. So we will be anticipating a lower high to be formed, and after a lower high has been formed, we will anticipate it to be into a lower low level. So for continuing or following the trend, we will be using what we will be selling. So targeting this low, which is an external range liquidity, since the market is bearish, and to break out this the previous low, which is indication for the trend has been turned into or is following the higher time frame, which is a daily and a weekly macro location. So since our exit is here, what we need to do is, before reaching into this key level, the market needs money, which is a liquidity, and we will be anticipating the market to move into a buy sell liquidity and reprice that liquidity and reverse to the downside. So on this video, I will be explaining how to anticipate the buy sell liquidity to be to be targeted, and before selling, we will be buying. This is how we find our buys for a swing trade. Since the market has reached into area of interest, which is on the daily time frame, as you can see right here, we have an imbalance, which is a big imbalance on a daily time frame, which will be a high probability. But after this fair value gap has been created, the market has been consolidating in this fair value gap, so which will make this area uh, this fair value gap to be filled once after reaching into a premium area, and when the price comes to clear out a liquidity or reprice sell side liquidities, it will fill this liquidity. Okay, since the fair value gap is here and from here and to here, as we know, ICT tells us uh, if a fair value gap has a consolidation, we will be expecting this fair value gap to get filled. In this case, since we have a consolidation and a big fair value gap, when they fill this level, we will call this level a hidden liquidity. Okay, this is a hidden liquidity. This is called a hidden liquidity because the market needs to be uh, people think around this level, since it is a fair value gap aligning with an order block, that you'll use this level to enter right here. So what the price did is reached into the fair value gap, again used this order block to induce buyers. Since the buyers are induced, the price moved, clears buy side liquidity, and reverse take out these buyers, and also a hidden liquidity around here. Okay, so uh, I will be providing a video or a photos that you can read after about hidden liquidities. When there is a hidden liquidity, what we are going to be used is the closest key level, which in this case is this level, this week, the fair value gap creating week level, which is called a full fair value gap. You don't need to understand or to know the names. What you need to do is understand the concept. So after price reaching into this level, we will be anticipating for the buy side to be cleared and reverse to the sell side. So in this case, for us to anticipate the sell side to be cleared, what we need to know is below the external average liquidity, there must be a liquidity that we can hunt. So in this case, this is our rejection block, rejecting this mitigation block right here, and price reversing after taking out liquidities. But the market has reversed from the full fair value gap area of interest, lifting this liquidity or activating this liquidity. So what we will call this level is the last liquidity, which is active right now. After price reaching into this area of interest, what we will be anticipating is this to be activated. The buy side will be cleared after reaching this level, is because this level is when they come back to the when they come back to clear share side liquidity, this will be taken because this law has active has make that law, this law we make we get into activate reactive liquidity. So we will get into that on another sessions. So our exit is going to be here, and we will be expecting for a reversal around this level or on a weekly time frame level, which is around here. Since this consolidates around here, we will be anticipating a reversal around these levels or this doji level. So now since we want to say to follow the higher time frame range or macro location direction, we will need to sell after price reaches or clears a buy sell liquidity. So in this video, what I'm going to do is we will be clearing buy sell liquidity together and use a confirmation entry for that, since we didn't sniper this level. Okay, when we get to that right here, what we need to do is we need to identify a higher time frame, this lower time frame, which is on our 1 hour, we need to identify which liquidity to be targeted. Okay, so right here, as we talked on the daily time frame, like I showed you, price fills this fair value gap, after consolidating in it. One, this is going to be a equal high, this is called an equal high because of this candle. So after consolidating, the market clears out this liquidity, which we call a hidden liquidity, like this, and reverse from a full fair value gap area of interest, as we talked right now. So Give me a second. So like I told you right now, when price after clearing sell side liquidity, when it reverses, what we need to anticipate the market to do is this high is formed, and in general a liquidity for this liquidity, which is this is a rejection block as we see it on the daily time frame. You need to remember that. So this was a single liquidity, and this candle has activated it, which is going to be this a reactive liquidity. Okay, this is going to be a reactive liquidity. This is why we will target the sell side liquidity what we saw on a daily time frame. Sick a little bit, that's why I'm coughing, I'm sorry. So around here, this is going to be a reactive liquidity because of this candle reaching or protecting this high. uh, I want you to just focus on the buy sides, and since we are not showing since I am not showing a lower time frame liquidities and higher time frame only, so what I want you to do is focus on the buy what I showed you, and we will be talking about reactive liquidities in sponsored zones together after you understand these levels, and after me knowing which level you can understand for me to explain it on me. Should I be on a deep basic concepts, or what we call it good concepts, like you can understand advanced? I need to know that. So I'm doing these videos because of that. I'm going to be like a medium advanced level. So what I'm going to do is just what I want you to do is tell me about what you don't understand about this video, and I will be making liquid about videos on every topic you want after talking uh, after you ask me questions. Okay, so now we know what's liquidity to hunt, right? So what we need to do is we need to find after price reaches into clears this price reaches into a discount area and reverses to the upside and shift its structure. This is why we are going to buy. So since I am swing, I'm not going to be going to do a more ping pong thing. The price needs to reverse after reaching into just for example, this high came from this high, and this is a reactive, it is going to be a reactive liquidity. We have this rejection block right here, so the market could reverse from the 50% level or this doji candle. Okay, this is just an example, and our stop loss could go here, around here. I'm not doing analysis for this one, but for what we are anticipating right now is, since we want to buy around this discount level, okay, we have a market structure shift here, and the price needs to come and clear this liquidity around here and reverse from that. So it's going to be a ping pong thing. So instead of getting into that, we will just anticipate the market to be we will just be buying. Okay, so we could have two keys around here. So how to know which one is a transfer low for us to buy for a temporary time, which is to just clear this reactive liquidity. We need to have a low that is protected for our stop loss, and identify which order block is going to be uh, a powerful one. So what we are going to do is, since we are on a 1 hour time frame, it is going to be enough for us to read the market, since we are watching a 4 hour dealing range. Okay, so we will be reading the discounts. Okay, we will be reading the discount levels, or what we can do is right now we can get another a dealing range when they break this low. Okay, when they break this low, we will be having a new dealing range on the lower time frame, which is could be like this, from the high to the low, like this. Okay, from the low to the high, we will be having a new premium and discount for 1 hour time frame, and buy from the discount. So what we could do right now is we can wait before doing analysis and marking out a transfer low or not, what we need to do is wait for a break of structure or a market structure shift to the downside and buy from the discount level. So price reaches into is going up. So what we could anticipate right now is when price breaks this low, it will give us a shift in market structure. Okay, so we get a market structure shift here and a break of structure like this. Okay, so price needs to be reversed from taking out a liquidity and reversing from a key level. So in this case, like I told you, this was a liquidity and also this was a liquidity. Okay, this is a liquidity and has been taken out like this because the market what has this high has been activating this high. Okay, so in this case there is a time when we use uh, a liquidity as a key, which is going to call a low foot, something like that. So what we are going to do is we will mark this as a key. We have a market structure shift to the both sides. So the new dealing range that has been created is from this high to this low. Since it has taken out a liquidity, okay, it must take out liquidity and reverse from a key level or area of interest. In this case, what we found right here is the price used this inverted fair value gap right here as an area of interest to reverse. If we go to the lower time frames, we could have get what you call it good key levels around here for us to sniper this level. But like I told you right now, what we need to do is we need to identify the market for just buying. Okay, in this case, now what we need to do is, since we have this dealing range, we need to buy from a discount and sell from a premium. So the market breaks structure here, but before breaking the market structure or shifting its structure, the price right here, it forms a QM. Okay, this is our QM level. It forms a QM and confirming that the market has traveled from liquidity to liquidity level. So before the high, this high is the one that was responsible for making this low. Okay, the first, okay, the closest swing high on a 1 hour time frame that clears sell side liquidity and reaches into a higher time frame area of interest. So when price goes back up and break this high, this first swing high, we will be calling this an inducement level because there is a big institution banks or institutions that are interested in this area that they want to be the market to be hurried and break this high. So since they place most of their orders between these levels, when price come back down, we will be interested into buying this area around here inside this. Okay, so what I want to say is if the price or let's say the swing high is around here, we will be interested in this level. Okay, if the price the first swing high that was being created was here, the closest one, we will be interested around here. Okay, this could be a lower time frame shifts, but we will be not concerned about that. What we need to do is identify this level and we will be interested into finding liquidities in the area of interest inside this zone. So now what we need to do is the market needs to engineer liquidity for it to come back to take this low and this low we talked about. So after this inducement has been created, the market, this is a basic SMC structure. The market breaks structure. This is an internal market structure, a break of structure. So this internal break of structure has came. Okay, so we need to know if this internal break of structure is a confirmed or the one that finishes the liquidity to the sell side. Okay, so right here what do we have? A liquidity. It is a liquidity for who? For this rejection block. This is a rejection block. After markets creating an order block right here, it rejects it like this. Okay, this is the order block support level. The price rejects this level, and when the price rejects this level, there was what, one bank or a one institution that feels the question or the amount that asked by the liquidity provider around this level to be like for example, we let's say this is a auction of a Bitcoin. Since this chart, what we see right here is an auction market, what we need to know is uh, in area we see just auctions between buyers and sellers. So when we talk about buyers and sellers, we need to have a third party, which is a liquidity provider. He needs to provide liquidities for a buyers and sellers at their question. Okay, so the price fills sell side liquidity. So the bullish or buyers want to accumulate or wants to buy, and they need to go up finding a liquidity for them to buy. So they started accumulating around this level. So price, for example, has been creating a real area of interest or another area that can be a transfer of money, which we call an area of interest. For since this level has been created and this is an area of interest, the liquidity provider will ask, let's say, 200 bitcoins. Okay, 200 bitcoins are is asked right here. Okay, so the liquidity provider will come down here and around this level. Okay, around this level, this candle, he will ask 200 bitcoins. So one institution will agree to give him a 200 bitcoin at this price level, which is 32,348. Okay, which is shown as the lowest amount or the low of the candle, which is they agree around this level. So there is a guy who puts money around here for pushing the market right here, but there are more banks which needs this level. So the market maker will come down and take out this liquidity and reverse from the 50% or the inverted fair value gap around here, taking out this liquidity and reversing from the 50% of the inverted fair value gap like this. Okay, so what we know right now is in this inducement level, the price or the liquidity is out. Okay, what will leave us with a transferred low like this. Okay, just if you want a setup or a model to look on this, uh, this low must end below or inside this level from the inducement high to the low, which is confirmed like this. This low has ended inside this level, and another two checkpoint is it must take out a liquidity. Okay, it takes out a liquidity, and it must have an area of interest and a key level, which is an inverted fair value gap, and the 50% is the key level. Okay, so what we know right now is this is a transfer low. So I don't want to get into the market uh, too deep more than this, but after price started pushing up, this zone, like I told you before, this zone is called a continuation supply zone, which is called by another retail traders, but it is an sponsored zone. Okay, sponsored zone. It's going to be called a sponsored zone. I will get into this in another video more deep, but this is called another an what's sponsored zone. So around here, around this level, what happened right really is since the banks are interested into moving up, there is a sponsor which was put around this level, and it is be shown like as a order block like this. Okay, the price pam pam pam, it was moving, but they will say stop, wait, I want to buy again around this level. And when they place their orders or when they fill their money around this, it is going to be shown as an order block, but the real order block was this one, and this change in state delivery. This is why it's called a sponsored zone or a continuation supply zone. So this has its own use, since we have a what fair value gap, and below it we have a liquidity like this. So we will not be considering this as a liquidity, but if the continuation supply zone is around, from what we see on a continuation supply zone is above 15-minute time frame, we are going to be using the support level if we are buying. Okay, there are cases when we use this, the close, the open level and the close levels. Okay, it will be differing, it will be different, but in this case we will be using this level. Okay, the close level. Okay, so around here we can do this investment in market structure shift for a lower time frame around here. So as you can see, this was a swing high that creates this swing low, which is when they break the market like this, we will be considering this as a investment level. Okay, this is a setup I want you to look for closely, and we will be talking about it another time in deep. This is an investment level for this low. Okay, and this is a market structure shift. Just we are since we are watching it on a what's a 1 hour time frame, we will be not considering uh, this is a 1 hour market structure shift. This is a lower time frame market structure shift. So this is a basic smart money concept. So as we talked about, again, what we are going to use is when the market reverses, we will be interested into buying below this level. Okay, we will not be consider, or we will not anticipate this fair value gap is going to be it is going to have a value or at 50% or at the fill, because it is not below this level. Okay, it must be below this level. So the key we found around here is what, a key level below this inducement level. Also it must have a liquidity, which is this imbalance filling is going to be a liquidity for this key level. So since we have a liquidity around here and a sponsored zone, a closed level order block, we will be snipering this level like this, and our stop loss could go 30 pips. Okay, I mean 3 pips, sorry. So also I'm just going to be using, so we will be targeting this reactive liquidity like this. Okay, so this is our key I want you to focus on. What we mark right here is we got an inducement level inside a higher time frame area of interest. Our direction was bearish, but since the price has shifted its structure, we will buy still the all liquidity or buy sell liquidity to be taken out, and we will sell from there. Since we have this keys and liquidity, we mark liquidity, we got a transfer low. Our area of interest must engineer liquidity to the upside for the price to come back and take out the all liquidity, the sell side liquidity. Okay, so what we are going to be anticipating is snipering from this level and targeting the all liquidity or buy sell liquidity and selling from there. So this is what we need to see on the market. Okay, this is our direction. uh, if the price, okay, when the price shifts its structure on lower time frames like this after reaching into this key or this inverse fair value gap area of interest, for your bias you can make what, a sell until this uh, shift or this liquidity in this is how we can get a high probability bias as a swing trader and a high win rate day trader. Okay, you can check my TikToks how I trade for the daily using a higher time frame range. Okay, so let's get into this. So before doing this, now at around here, before reaching into our key, what do we have right here? A short term low. Okay, this is a short term low. This is a high advanced lower low and higher lows swing points identification. This is our short term low. So which is going to be, when this has been taken out and market reverse from this, it will be turned into as intermediate term low, and it can hold until this gets, this is a sign of showing a respect for that area of interest or a key we mark right here. So before doing that, we can use a Fibonacci circle for identifying or making this key label as a confluence, if we to know if this is what a high probability or not. So we have a shift right here. I will be making another video for the Fibonacci, how to use it. We will be having when to mark it from zero and which high or low will be used. We will be having a session for that too. So before doing that, for identifying this now, let me just mark how I mark it. Then I will be using my own setting. This is an advanced one. Okay, so as you can see right now, from the high and the low we mark, it is respecting our key level and showing it respect. Okay, this is my own setting. I will be giving out this setting after you understand about all of these concepts I talked about, and I want you please to ask me a question if there is another anything you don't understand. We're looking this kinds of market or identifying. We don't use a lower time frame, so we will not be having a minimum of 2 pip stop loss, since we are only watching the market on a higher time frame. So let's see. So we got tagged in. So after we get tagged in, the price again do, we have this swing low first. Yeah, so price takes out this low and forms its low in our key level. So we will be calling this level our what, intermediate term low. Okay, which will hold until the market finishes the buy side liquidity. Okay, so there was buyers who are induced at this level and got trapped. So when price takes out this high, let's go to the 50-minute chart. Okay, so the first swing high around here, this is what, the first swing high, that is a reason for clearing what, this, creating this low. So when price breaks this one, we will call it what, inducement level, right? So this is will be different. So this is what a market structure shift for 50-minute time frame. Okay, I want you to see it for the time frame. So if we go to the 4-hour chart, this could be an inducement for a 4-hour chart. So since we are buying and selling, now what we identifying this inducement in market structure shifts on a 15-minute chart. This is going to be on a 15-minute chart concept only. So this is a break of structure. So for a 15-minute chart, this low has been confirmed. Okay, displacement is a must thing to confirm our low. Okay, I want you to understand what I'm saying. We will be understanding what, oh, wait, give me a minute. 475. Okay, so we will be using what we call it Sharry pip stop loss maximum and target what, our reactive liquidity to the buy side, also the end of the circle. Okay, so when price clears out sell side liquidity after taking out this high and filling this fair value gap, it must finish what, sell side liquidity for a 15-minute time frame. So we have this liquidity right here and sponsored zone right here. Okay, So also in sponsored zone, what we have below, what we are going to be interested is below the inducement level, and below the inducement level, below the liquidity, we got what, this MSNR key level as a key. Okay, if price reaches into this, we will be buying here. Stop loss is going to be around here. Okay, the price just goes up and what, activate this liquidity like this, as you can see. Now when price reverses or come back down, we will be anticipating this to be an equal low, and also what we are going to do is anticipating the market to reverse from this level, or we will go to the higher time frame, the 1 hour again, and look if we can get another thing. Okay, now the stop loss we make around here is, what do we have here? Also watching the higher time frame is good. Around, as you can see right here, the price didn't reach into this level when it enjoys liquidity around here. As you can see, it has an equal low, which is a double liquidity or a consolidation. It can be considered as a double liquidity for this fair value gap, which is going to be called a hidden liquidity, this level. So what we can use right here is, we have this Quasimodo level inside the 50% of what, the order block. Okay, so let's go to the 5-minute chart and just try to identify if price this is going to be used if price reverses. Okay, nothing more, nothing less. If it doesn't reverse, we will not care. Okay, it must reverse after clearing, before clearing buy side liquidity. Okay, we will be just using this key if price reverses before clearing reactive liquidity. Okay, if the buy side is not finished, we will be using this key to engineer another liquidity again. Okay, so right here, what do we have? A fair value gap. As you can see right here, we have a fair value gap, open close level, and order block. Okay, so this order block has a turtle soup like this. Let's go to the 15-minute chart to confirm if it is a confirmed low. So as you can see, the turtle soup has not been what, confirmed, and as you can see, this level is what, a sponsored zone, right? This is when we use this as a loft. Okay, this is being called a loft. I'm going to be making another video about using when to use this key level. Okay, when we'll be using this key level or not. This is a sponsored zone, but it doesn't fill what, the fair value gap on the 5-minute chart. So our stop loss is going to be here. Okay, so since this fair value gap is fresh, we will be using this fair value gap for as a key area of interest. Let's go to the 1 hour. What we make as a loft is right here. As you can see it, what, it is a Quasimodo level, which aligns with our time frame or our point of view. So if price reverses before clearing this one or finishing liquidities, we will be using this key for snipering again. Okay, okay, price what this takes out and finishes what, repricing buy side liquidity. Okay, so the price takes out, yes, takes out what, liquidity, but as you can see right here, let's see if we have another liquidity. Okay, since we have this rejection block, for people's or sellers to be interested, it must be at least a 50% zone. Okay, 50% is like this. If price, the recent price touches this level, we will be considering it is reversing fully, but if not, it is engineering liquidity for a lower time frame. So as you can see right here, it takes out the reactive liquidity but doesn't reach into our area of interest. So we will go to the 5-minute chart and try to identify another liquidity above this. Okay, So as you can see, the recent price did active this fair value gap. Give me a minute. This fair value gap active. Okay, it activates this fair value gap. Okay, so what do we have right here? Order block, fair value gap. This is an equal high for this one, and price still reverses before taking out the or filling the fair value gap. So what we will be anticipating is this to be a hidden liquidity around here, or we could use this to be a hidden liquidity. Since this is a 5-minute time frame, we will be using this level as a key level. Okay, this is going to be our selling key level. We will be refining it into higher time frame point of view. I'll be going to make another video about this. See you.